Hello and welcome to the 12th video of my free algorithmic trading course. In this video we will look at how to create options trading algorithms inside of QuantConnect. Currently QuantConnect supports options for about 4,000 symbols trading on the CBOE. Unlike for other asset types, QuantConnect only supports minutely resolution for options. Options are divided by underlying asset, option type, strike price and expiration date. This means there can be hundreds of different options for each underlying asset. That's why options trading algorithms usually have to go through a lot more data than simple equity bots, which is why it is particularly important to pay special attention to efficiency. If you're not familiar with how options work, I highly recommend checking out my website, on which I offer a free course breaking down everything you need to know about options. That said, let's now look at how you can add options data to your algorithm. For this, you can use the add option method. Here you can specify for which underlying asset you want to add the option data for. After that, you can use set filter to filter which options you want to add. Here you can specify which strike price range around the underlying price and which expiration range you are interested in. Typically, you would add the data and apply the filter in the initialize method. To then actually use the option data and trade options, you can then iterate through option chain objects in the onData method. You can then filter the option contracts in these option chains by strike price, expiration, Greeks, open interest, implied volatility, price, and more. I will show this in more detail in a few minutes when we get to the coding part of this video. The problem with using add option and set filter is that it adds a lot of option data to your algorithm that you might not actually need if you only intend on trading one or two contracts. That's why QuantConnect also offers an alternative that allows you to only add the data for individual options to boost efficiency and backtest speed. This method uses the so-called option chain provider. The option chain provider allows you to get the list of available option contracts for one security on a specific date. You can then filter this list to find a particular contract that you're interested in. To then actually trade it, you would need to first add its data, which you can accomplish with self.addOptionContract. Typically, algorithms using the option chain provider method are much more efficient since they don't subscribe to that much data. So if you find an option algorithm to take too long to backtest, you could try switching to an option chain provider implementation. In this video, I will demonstrate the add option and set filter method by implementing a simple options trading bot. However, I also have another video in which I use the option chain provider that I highly recommend watching after this video. If the demand is there, I can also create another video in which I implement a bot that trades more complex multi-legged option strategies such as iron condors, butterflies, strangles, straddles or something else. With that being said, let me now quickly present to you the strategy that we will be implementing for this video. For simplicity's sake, we will be implementing a simple bot that buys call options if the underlying asset's price breaks out of its 1-month high price. This means we will use an indicator to keep track of the underlying security's high price. If a new high price is reached, we want to buy an at-the-money call option. For this strategy, we will allocate 5% of our available portfolio capital to the call option. This 5% might not seem like that much, but since you can easily lose your entire investment with options, it is actually a very risky strategy. Since we do not want to exercise our options, we close them a few days before expiration. That said, let's now head over to QuantConnect and start writing some actual code for this trading bot. As always, we'll go to the Lab tab and click on the Create New Algorithm button, which will bring us to a sample template algorithm. If you haven't already, make sure to create your free QuantConnect account using the link in the description box below. For this video, I will choose the backtest timeframe to be 3 years between 2018 and 2021, but feel free to try out different periods. I will leave the starting cash balance at the default 100,000. Next up, we can already add the data for the underlying security using the add equity method. Here I will use Microsoft as the underlying asset, but you can of course try it out with different securities. As for the resolution of the data, I will specify minutely data since options currently are only supported with minutely data. Furthermore, options only support raw price data, which is why we set the data normalization mode for this equity to raw. Thereafter, we save Microsoft's symbol to the self.equity variable and set it to be the benchmark for this algorithm. Now, we can add the data for the options themselves. In this video, I will use the set filter approach, but there's a link to a video using the option chain provider in the description box below that I highly recommend watching after this video. So to add the option data, we first use the add option method and specify Microsoft as the underlying asset and minutely resolution. Next up, we apply the filter to this option data. Here, the first two arguments specify how many strike prices above and below the underlying asset's price we want to consider. Since we only want to buy at-the-money call options, we don't need a very wide range here. The next two arguments determine the time span for the expiration dates that are being considered. We will consider options with an expiration date between 20 and 40 days from now. Note that if your filtering criteria is not very specific, a lot of option data will need to be added to the algorithm, which might make it very slow and inefficient. After that, there's only one thing left to do in the initialize method, namely add an indicator that keeps track of the high price of Microsoft over the past month. For this, we can use the ready-to-use max helper indicator and specify our equity as the data source. Here, we just use daily resolution since smaller intraday changes are not that important for the high price. Since we're interested in the high price, we specify that we want to keep track of the high price as the last argument of this method. With that, we are now done with the initialize method and can move on to implementing the onData method, in which we will implement when to enter and exit positions. However, before we can actually move on to that part, we need to check if our max indicator is ready to use. If it is not yet ready, we just return. Otherwise, we move on, and in the next step we want to check if we already have any open option positions. For this, we create a list with any potential open option positions. To create this list, we iterate through our portfolio objects and save those that are of the type option and invested. So if this list is not empty, it means that we have an open option position. In that case, we want to check if there still is enough time until expiration, since we do not want to accidentally let it expire and thereby exercise the option. So if there are under 4 days left until expiration, we simply liquidate the position. If there's more time left, but we still have an open position, we just return since we already are invested. In the case that we are not invested, we first check whether the underlying price made a new high. We check this by comparing its price to the max indicator's value. If there's a new high, we want to open a long call position. To accomplish this, we iterate through any available option chains and pass the available option chains on to another method that we will call buy call. So next up, let's actually create this custom buy call method. Like the name implies, this method is supposed to find the right call option and buy it. For this, we first need to filter out the correct option from the option chains that were passed on to this method. Here, we first sort the available chains by expiration date and pick the furthest away expiration date. Note that this will always be at least 20 days and at most 40 days from now, since we applied a 20 to 40 day filter in the initialize method. Next up, we filter out only the call options with this expiration date, as we're not interested in trading any put options for this strategy. After doing that, we now just have to sort these call options by their strike price, and then we're ready to actually buy the option. We want the option with a strike price that is closest to the underlying price. That's why we sort them from closest to furthest away from the underlying price. If this list is not empty, we save the first element of this call contracts list to the variable self.call. This will be the call option that we want to buy. However, before we can actually buy it, we need to calculate the order quantity. For this, we first divide the available portfolio value by the option's price. Since an option controls 100 shares of the underlying asset, we then divide this quantity by 100 and multiply it by 5%. We multiply it by 5% because we only want to invest 5% of our portfolio into one position. We round this value down to the nearest integer, and then we can finally buy it. Buying the options can be accomplished with self.buy and then passing the option contract and the order quantity. Now we are done with implementing the trade logic for this bot. However, before I backtest it, I quickly want to mention that you usually need to pay special attention to option exercising and assignment when developing options trading algorithms. Especially when you're shorting options, assignment is a big topic. When buying options and letting them expire, QuantConnect automatically exercises them. This algorithm should never exercise any options since we closed them early enough. However, if you want to handle option exercise differently, you can for example do so in the onOrderEvent method. To check that an order event is an exercise, you can check the order type. If, for example, you don't want any shares of the underlying asset in your portfolio, you could use self.liquidate to close all open positions and reset your portfolio. That said, let's now click on Build and Backtest to check out this strategy's performance over the specified time frame. If we look at the equity chart, we can see that this strategy performed quite well over the specified time frame. However, here it is important to remember that this performance is heavily dependent on the performance of the underlying asset. If the underlying asset, which here is Microsoft, would not be performing so well, this strategy would likely not either. So if you would go with a different underlying or time frame, the performance might be much worse. Besides that, you can see that this strategy performs best when the underlying price rises fast. Due to the payoff profile of options, this strategy would not be nearly as profitable if the underlying price would climb up slowly or more sideways for a while. However, this strategy does seem to handle market crashes and downtrending markets relatively well. This is the case since it does only invest when the underlying price makes a new high, which typically does not happen in a downtrending market. So in such a market environment, this bot just stays flat. Nonetheless, I can't recommend actually trading this strategy with real money without any further development and testing. Firstly, a lot of the parameters such as the time till expiration, breakout period and more are chosen very arbitrarily. Furthermore, over this backtest timeframe, that strategy only made 43 trades, which isn't a very significant amount that you should use to draw many conclusions from. Nevertheless, I hope that this bot gave you a good idea about how to trade options inside of QuantConnect. For another options trading example bot video, in which I used the more efficient option chain provider, I highly recommend checking out the video that I linked in the description box below. That said, make sure to smash the like button, subscribe, and turn on the notification bell for more content like this. Thanks for watching.